In to another edition of the Vulcan Report. This end of day report is for trading on Wednesday, August the 23rd, 2017. Starting things off with the Dow Transports, ticker IYT. If you will remember, we had a crash alert on the screen. You can see that this stock is on its way down, well-defined downtrend channel. Right now, the orange trend line of 161.49 is in play. We closed today at 163.64, so that's not too far away. You don't want to close below that because that puts you into the Kumo cloud of death, and then you would be in free fall as the gravitational forces will pull prices toward the lower end of the Kumo cloud, which would be around 149.97. So that's around, we'll just round it off and say a $1.50. And it could even drop below that. So this one is definitely one to watch. Looking at the XIV, you see that it is desperately trying to bounce, desperately trying to hold on, but this here was a pretty significant drop. And again, you're looking at a weekly chart. I still say that the trend line of $65.62 is in play. We closed at $81.69 today, toward the top end of the range. But like I said before, is the market setting itself up for the next leg down? Is this week going to be the week that sets up for the next leg that looks like this, where we dropped from $96.72 all the way down to $72.64, a $24.08 range. Is this what we can expect from here? This bar would put us virtually inside the Kumo cloud. That would bypass rampage. That would kill it. Let's see how much power we have in this. For right now, momentum is going down. We've lost momentum. First week we lost it. Last week we lost it. This week we still haven't gained it back yet. Market needs to close above $82.75 this week in order to put an end to the downtrend. Can it do it? Will it do it, or are we setting up for that next leg down? This is going to be interesting. But for right now, all pullbacks in the market are being bought. All pullbacks are being bought. All right. Let's see if we can get a continuation on this one. Gold is holding steady, or is it frozen at this point? All right. The longer it chills up here without breaking out above that 1300, the more the algorithms are going to sense blood in the water. Right now, gold is on high alert. This is usually where the central banks come in and smash. Hawk smash. 1, 2, and 3. We're holding up. All right. We didn't do that prior time, so this could be a very good sign. We didn't do that here. We didn't do that here. We didn't do that here. So, technically speaking, this bar should look like this bar if we're going to run. So, technically speaking, we should have much more to go. And we should close somewhere around, I want to say $1,315.60 give or take a buck or two. But that's where we should be closing this week if this market's really going to get up and go. If not, central banks are going to smell it, and they're going to push this thing below 1270, 840. So get ready. We're watching and we're waiting. Looking at silver. Silver really wants to prove to the world that it is more than just a pretty face. All right? But it's below the Kumo cloud. And like gold, bam, bam, bam. But this time, not so fast. Is it going to be a catastrophic fall, or is it going to shock the world, and are we going to go into the Kumo cloud? Or even bust out of it, just shoot right through it. A parabolic move. What event could make that happen? As of right now, we trade what we see. But the market is struggling around the trendline resistance of 1707. 1707 is not only a intraday price inflection point from last week, but it's a price inflection point for this week because it's also where the trendline resistance is. 1707, folks. 1707.5, really. Y'all remember that from the trading room. You remember 1707 from last week. 1707.5. You can't make this stuff up. 1707.5. Intraday price inflection point that carried over from last week. And now it's manifesting this week. And now it has manifested itself as the trendline resistance. You can't make this stuff up, folks. I told you the pulse waves lead the market at times 3 to 5 bars out. Sometimes sooner than that. So here we be. All right, here we be. Okay. Let's see here. GBT to the C. All right, hanging in there. Hanging in there, okay? This one is definitely on the radar. I think it wants to really get up to about 1,200, maybe 1,000, 1,200. Who knows? I did tell you guys about the rampage back here. I told you this was parabolic, and here we are. Now we're gonna have a period of sideways to slightly higher prices, and then another rocket takeoff. All right, and that's that's around the second rocket takeoff is around February of 2018, around mid-February. So this is going to be interesting, folks. G to the B to the T to the C, and it's locked in. Get a locked in parabolic. Look how these trend lines are moving and spreading wide and far apart. That's crazy, isn't it? But at the end of the day, I'm still concerned about this right here. Got to do something about this gappage. So at some point, got to deal with this gap. All right. Anything else I want to talk about? Not really. We're still waiting to see what's going to manifest itself. And right now, we don't have too much. So we're going to chill on it. U.S. dollar index did pull back just a little bit more. We're at the 93.19. Let's just pull that up. All right. Here you go. So it's coming back down. Struggling to get back up. Not really doing it. But like I said before, you still got 300 pips plus to deal with. They can allow this thing to drop 3 full points and still be in the strong dollar, within the strong dollar policy mandate, believe it or not. I'm just saying. And even though this is a weekly chart, just looking at this weekly chart, can't go by this because, again, the algorithms is what tells the story and what's happening. And right now, the algos say you're in a baby trend. You're in a baby downtrend. You are not even in a full balloon, bear market or a parabolic thing. This is just a little baby thing. This is at the beginning stages of a bear market. So it is what it is. All right. So I rather listen to the algos. So this right here is not necessarily real. And I think the reason why it's picking up like and reading that like that too, because we know this is really the Fed's doing. They have to allow the dollar to weaken a little bit because it was too strong for the import exports, and they had already told you that. So they're just doing what they already told you. Bonds, that's right. Berry bonds. Let's look at these berry bonds. Berry bonds got real powerful. Start flexing on everybody today. Look how these bonds flex. Look at that. The strong bond flexed on you. All right. Got all the way up to 156.18. I told you it's marching to 160. It's not playing around, people. It's not playing around. This right here. Boom. Boom. What you gonna do? Boom. Back here was 156.18. Boom. So far, where we at? We at 156.17. Come on, you can't make this stuff up. Just 1/32nd. 1/32nd away from that same close of back here. Are we double topping? And then head and shoulders on, and we crash from here? And then the Fed gets to raise rates 1 billion times before the end of the year? Or is it going to continue to go and it wants to go to 160? Let's see. This is interesting right here. The week ain't over with yet, folks. So, boom. We're only a 1/32nd away from tying this closed here. So it can easily power up more and exceed this. Then you don't have a double top. You just broke that mold. You broke that resistance. Bam. So this is a very, very interesting one here. All right, so here we are. This is how we looking this week, folks. All right, let's take a look at a few equities. Actually, no, I did promise I would do this. So let's do the yen real quick. Let's see how the yen's looking. What did it do today? All right, your yen is still in the Kumo cloud of death, but in danger of dropping below it. See how we're coming down some more here? All right, you do have lows, intraday lows outside of the cloud. Are we in danger of closing below the cloud this time, though? So gotta watch that yen. It's looking mad weak. Let's look at the euro yen. All right, looking at your euro yen. Looking at the euro yen, you got still off of that momentum. Gosh, yeah, it's losing the momentum. We still got another day of trading, but still, really 2 days of trade, I should say, because you got to count Friday. So here we go. All right, can take back Friday help it? I don't know. This will be the third week closing below the momentum line, folks. Need to close above 128.96 if we're going to stop the bleeding. Fair to do that opens up more downside, and then the trend lines come into play. 126.56 downside, and then 123.61 is right here. Boom. Huge correction could be coming into the stock market, folks. It's like I said before. We're watching a few things. We're watching the euro yen. We're watching the XIV. We're watching the Dow transports for blues clues into what will be happening. All right. Let's see here. Let's do this. All right. Let's pull up this Russell. I just holler at Russell real quick. What up, Russ? All right. So is Russ going to bounce off the trend line and take off, or is it going to get us into the Kumo cloud? Well, let's look here. We got 1, 2, 3. This will be the fourth week below the trend line momentum of 1387.91. If we can't close above that, that does open the door to the trend line of 1345. And then, of course, you know what happens. You get into here and cut through this cloud like a hot knife through butter. And then that puts us in a bad situation. downtrend channel is in full effect and remains intact. All right, I think I covered everything I needed and wanted to cover at this point. There's nothing else for me to cover, so I'm done. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back to the greedy central bankers. And learn how to trade these markets, folks. You are missing out on wonderful opportunities if you are not involved. You're missing the crypto space, you're missing the forex space, you're missing the equity space, you're missing the futures. There's so many different opportunities, okay? Yes, I know there's not a trade to be had every day. You got to wait for the markets to come to you, but you're missing out. And don't say, well, I don't have any money. You know, Joe Citizen don't have no money. It's not true. That is not true. Stop it. If you work at McDonald's or Wendy's, you can still get involved and you can still trade. That's why that's why they created micro forex so that you can trade with $500. I'm serious. You can open up an account and trade with $500. You know, start building, start doing some stuff. And come on, you got cryptos out here, man. You got cryptos trading in the pennies, 18 cents. You can't get 100 of those, 100 of them, 100 coins. You can't do that. Come on, people, get yourself some tokens. Come on, get in the game. All right, stop making excuses for staying in poverty. And for those of you who are not in poverty, if you want to remain out of poverty, you got to create another income stream for yourself. Don't depend on your gold and silver stacking holdings. You got to protect them, okay? Because the central banks come in and smash them down and keep them down. If you need to raise funds, you won't be able to do that by selling your physicals. So you got to get in here and learn how to short these markets along with the central banks. Learn how to get long the paper. Learn what that means. There's so much I can teach you. When the student is ready, the teacher will appear. Well, I'm here. So come to class. PulseWaveTrading.com. Peace.